Crude oil loading plans show that Angola will soon export at the highest level of shipments in almost 4 years, justifying the government's decision to leave the OPEC oil cartel last year. Higher export levels are incentivizing foreign direct investment in Angola's oil sector. Crude oil accounts for almost all Angola's export earnings, but production fell from 1.5 million barrels per day in 2018 to just over 1.1 barrels last year, straining the country's finances. On the back of higher energy sector revenues, Angola has seen an uptick in foreign direct investments, particularly in the oil and gas sector. French oil major TotalEnergies is pressing ahead with the development of the Caminho oil project. Angola is Africa's second-largest crude exporter, although its fields are declining by 15% each year. The country is therefore pursuing economic diversification initiatives that are being sponsored by the multilateral development institutions. To meet IMF fiscal conditionalities, the government has increased petroleum prices to cut subsidies that have strained public finances. A near doubling of fuel prices in June last year triggered deadly protests in the southern African country, as thousands took to the streets. The government is now imposing tougher security laws to crack down on dissent faster and more decisively, triggering criticism from human rights organizations. Nevertheless, Western investments have continued apace, particularly in power and logistics infrastructure. For example, Italy is investing $320 million in the development of the rail infrastructure associated with the Lobito Corridor, a 1,300 kilometers railway line connecting the copper belts in Zambia and the DRC to international markets via Angola's Lobito port. While new investments in key sectors are a positive signal, with many new projects in an early developmental phase, it is likely to be some time until hydrocarbon and mining revenues increase substantially. In the interim, Angola will face protracted challenges in managing growing fiscal pressures. Angola's cash crunch and debt burden are motivating its government to unlock cash from a Chinese-controlled account to pay interest on a crucial loan. Angola owes about $17 billion to China, just over one-third of its total debt, mostly in the form of loans backed by oil. Angola needs more than investments in its hydrocarbon sector and requires broader economic diversification to mitigate its debt crisis and drive meaningful socio-economic development. Pangaea Risk rates Angola at elevated country risk in the one-year outlook due to persistent regulatory burden issues and risk of sovereign non-payment.